we are starting off for another great episode, and I'm very excited for this particular podcast. This is a Public No. This is on behalf of Public No, which is a nonprofit organization led by stellar community members working together to support the open and inclusive Stellar Network. And I'm very pleased to have Michael here with Velo Labs. Michael, how are you doing?
Hey, Sam, I'm doing good. I'm very happy to be here, very excited about this interview and really looking forward to the conversation we're about to have.
Well, great. Look, let's go start right into it. I wanted to just first introduce you to the audience and the Stellar community and allow you to share a little bit about your background because I know that you have quite an extensive history in blockchain. It's not your first foray.
No, it's not. I wish I could say I spent a lifetime in blockchain, but it's still a fairly new industry. I first got involved in blockchain probably back in mid 2012, 2013, just more as a curiosity, wanting to learn more about what was going on. And the more I learned, the more, the excited I got, the more visionary I saw the whole concept of blockchain and digital assets, cryptocurrency, really starting to understand the impact that those things can have on the world, the improvements they can make. So I spent probably between 2013 and 2016, just really educating myself, learning about Bitcoin, learning about some of the other projects that were going on at the time. That was early days of Ripple and things like that, coming to about 2016 is when late 2016 is when I really got involved directly with Ripple and started working for Ripple as their first hire in Asia, first feet on the street, if you will, in Singapore, covering Asia Pacific.
Wow. And I know beyond blockchain, you've also have some experience in, non-blockchain, more traditional business as well. Do you mind touching on that just a little bit?
Yeah, sure. Look, I've, you're right. And I have a fairly extensive background. So I've had about, my career is a little over 20 years. Now, so dating myself a little bit, but yeah, I've been in the industry, in the technology industry for about 22, 23 years now. And yeah, I've always been at the forefront of technology. So I've had fairly extensive stints at companies like IBM, HP Autonomy, Fiserv, so large organizations. First part of my career, probably the first 15 years or so of my career was all spent in large technology corporations working with some of the cutting edge stuff. So the blockchain era, if you will, reminds me a lot of the .com era. Started my career at right in the heyday of the .com era. So that was very exciting. And the industry, the blockchain industry today has a lot of elements of that .com era. So yeah, coming out of those big companies and then changing my career into fintech and focusing on things like blockchain payments and digital assets has, it's really been pretty well-rounded, pretty good exposure across the board.
And, the reason why I asked that is that there's a lot of projects in the blockchain universe. And, a lot of times what you see is you have projects that sound good, but the people that are developing them, working on them, really don't have that balance of experience to know how or if it can work in the real world. And so, I just thought it was important to point that out for the audience to give some balance to that.
Yeah, no, and Sam, it's a great point, and you're right. I couldn't agree more. You see new projects come up every day, and it's always questionable. It's very important to look at the teams involved with them. It's always questionable when, with people that don't have much experience. I mean, which is why I said it does remind me, it's yet another aspect that reminds me a lot of the .com era, right? During that time, there are a lot of different websites and things that would pop up, and it was really, if you wanted to make a quick buck, you put .com behind anything. That was a get-rich-quick scheme of that time, and I see a lot of similarities with digital assets, cryptocurrency, and the projects, and a lot of these projects that pop up that really, if you look beneath the surface, the teams aren't qualified, they're inexperienced, there's no real use case, it's just bound for failure. So yeah, you're right. There are a lot of projects like that, and I think it is important to have people that really have the real world experience and the business acumen to take things forward in the right constructive way.
Couldn't have said it better. So while we're on the topic of knowing what you're doing and having experience, I know that Velo is not walking in here soft-footed either. You guys got some pretty heavy hitters, founding members, investment partners that are behind the creation of this project and protocol. So if you don't mind, if we can get some background on some of these heavy hitters, as I said, that are in the Southeast Asia community that you guys are walking in with.
Yeah, absolutely. And I mean, I think this is the kind of stuff that you really want to look at in these projects is, who is involved and who is backing them, who's driving the cause forward. Velo Labs is blessed in a lot of ways to have our chairman, Chachaval Jeravanan Kunchat. So Chat he's very well respected, very well known serial entrepreneur, investor, and just a huge business presence in the Southeast Asia business landscape. I think he's a little bit, and as well on the global front. So, he is part of the CP group. He is one of the senior members of that family. So CP Group happens to be one of the largest conglomerates in the world. They're the fourth largest conglomerate in all of Asia, not just South Asia, but now stepping into the broader region, all of Asia. Massive holdings. They operate in over 20 countries. $63 billion a year in revenue alone.
Say that one more time.
Yeah, exactly, man. They're big. They're big. So yeah, so like I said, not soft-footed.
Yes, no, that's really exciting. And did I read somewhere about a connection with 7-Elevens? Is that correct?
Yeah, that's right. So if you visit Thailand and you walk into a 7-Eleven, that's all CP Group, and that's just one part of it. So they've got thousands of stores across Thailand. So the entire 7-Eleven chain in Thailand is all owned by CP Group, and they work very closely with the larger 7-Eleven, 7 & I Holdings. That's also got some involvement in this as well. So it's not just Kunchat, but I think that's a big presence. And I mean, little known fact for folks up, that less familiar with Asia and more familiar with the West, Chat is also the owner of Fortune magazine. So he acquired Fortune magazine a couple of years ago.
Wow, that's impressive. That's impressive. And I remember reading about on the 7-Elevens. For everyone that's listening into this, the 7-Elevens in Southeast Asia is not the same like the 7-Elevens in the US. It's much nicer. It's incredible. People are very excited about their 7-Elevens over there. It's another creation. It's a lot better, I think, in my opinion.
No, it is. It's a little different, and since you touched on that, there are reasons. There are reasons that it's a little different because in the U.S. and I grew up in the U.S., lived there for the majority of my life before I came to Asia, and the 7-Elevens in Southeast Asia and across Asia for that matter are quite different, but they provide different services to the communities that they're in. So like in the US where convenience store, it's just like your little, 7-Eleven's like your little corner store, and there might be one every few miles. Here in Southeast Asia, you can pretty much run into a 7-Eleven. So every 3 or 4 blocks, you're probably going to run across a 7-Eleven, but they provide a deeper gamut of services. So you get a much broader scope of groceries and things than you probably would find in 7-Elevens in the US. You'll even have electronics, small electronics and things, financial services. So a lot of these 7-Elevens in different parts of Southeast Asia and Asia as a whole. I mean, if you go to a 7-Eleven in Japan, right, which is a little bit north of Southeast Asia, but if you go to 7-Elevens in Japan, you've got entire banking services that are there. So yeah, it is a different experience.
And this kind of ties perfectly into this next question that I have. When people are looking at these projects, right? Like I said, you got to know the team, you got to know the people behind it, but it's also important to understand the culture and the environment, and so that way you can understand the real need for the protocol. And so I was hoping that you could spend a couple minutes here just helping the listeners understand the Southeast Asia market a bit, so that way they can grasp what Velo is trying to solve.
Sure, it's a varied market, right? There are first world countries, there are developing countries, there's big populations. And then there's just a lot of variance in different between the different countries. I mean, yeah, Singapore is very modern. It's very developed. I would even say, that Singapore, by comparison to a lot of large cities in the U.S., is far more advanced. But then,
Mhm.
that's Singapore. But if you go into over into some other countries in Southeast Asia, you can see that the infrastructure isn't quite as developed. You can see that improvements are being made, that investments are being made, but there's still a long way to go. You can see different levels of access to key services. So you can see, Singapore, there's ATMs everywhere. There's access to cash. Everything is connected and wired. Everything's on the internet. But if you were to step into some of these developing countries like Vietnam and Indonesia, in the larger cities you'll see those things, but again, not everybody lives in the large cities. And even in the large cities, there can be a lot of disparity between what's accessible to some and what's accessible to others. And so this is where we get into things like financial inclusion. A lot of the countries have different levels of banking. So I think it's important for people to understand. In the U.S., it's very common to have a bank account, right? I mean, these days
Right.
you have to. That's where your direct deposit for your job and things go. That's where your tax returns go. So in Asia, in most of Asia, especially Southeast Asia, cash is king. And the reason that cash it remains king through through a lot of the region is just plain and simple that there are a lot of underprivileged populations who do not have access to banks, and even if they happen to be in a larger town, and the reason being is that they literally don't have the income levels to sustain a bank account. Right, banks can't afford to just open bank accounts, open branches in every village, hold bank accounts for every person when those bank accounts aren't utilized, don't have funds in them. So it creates a big problem, and this is something that you see across Southeast Asia and the entire of Asia for that matter. And you'll see the same things in Central Europe and as well. So it's not completely confined to Southeast Asia, but it's very obvious. It's you can definitely see it.
And I know that in looking at the map, they're all close to each other. So you're crossing borders frequently just to do regular commerce. Am I correct?
Yeah, yeah, absolutely. I mean, COVID, the COVID situation has put a little bit of a kibosh on travel for
For
everyone.
sure.
But yeah, yeah, in a general sense, I mean, doing business here is very international. People travel between countries here, frequently. Pre-COVID and knock on wood, post-COVID, we'll get back to having that ability. I mean, I can use myself as an example. I used to, doing my job, I used to fly all across Asia because you have to. The economies are so interconnected. It's quite a bit different in North America or the U.S. for that matter, where you wouldn't really need to do your job. Like if I were doing sales in California, I spend most of my time in
Absolutely.
California driving up and down the state, and maybe I might take a flight here and there. Here, just everyday business is getting on an airplane. Easily, I can tell you on average a year in Southeast Asia, I'll easily fly 200,000 miles without even trying.
That definitely sets the stage. Going on to the remittance market, because I know that
Mhm.
this is a big area for you guys. Why is there such a big need for a remittance solution in Southeast Asia?
Yeah, well, look, there's a lot of reasons for that. And some of it goes back to what I was saying a few minutes ago with the fact that there's a lot of different levels of access to the financial services ecosystem. And that's part of the problem, right? There's very large populations of unbanked and underbanked. So that's one. We need to give people better access to financial services. The remittance is a big part of that because, as we were just talking about, people travel across the region, and a lot of the population that I'm talking about that's unbanked and underbanked, they work in domestic services type jobs. So
Okay.
you'll see them coming from a lot of these different countries into the more developed countries. So you'll see people from Philippines coming into Singapore to provide domestic services. You'll see people from Indonesia, doing the same thing. But all of those people providing those labor intensive jobs, domestic services jobs, hospitality. So, a lot of the people that you see working in hotels are actually, foreigners in that country where they've come provide those, those service jobs. Now, all of these people need to send money back to their families. The whole premise of why they're going to other countries is to improve the state of their lives. And as they earn income, they need to be able to remit it back to their families. And this is where the remittance, good remittance solutions, really come into play. If you take a look at what the remittance landscape has looked like over the years, it's surprisingly as much of a global need as there is to get money around the world. The rails that the world have been working on are over 45 years old now, right? And that's the Swift network, right? And there's a lot of challenges with that. The Swift network isn't inherently bad, but it was built for a different purpose in retail remittance. It was built to enable correspondent banking, very large transactions between large institutions globally. That the correspondent banking system was not designed for you and me. It wasn't designed for small banks. It wasn't designed for SMEs, and it certainly wasn't designed for the unbanked and underbanked. This is one of the big reasons that there's a need for these kind of solutions where we have interconnected economies, but the monetary flows between those economies aren't as interconnected as the people are.
Very insightful information. Like I said, you're really creating a very vivid photo for us of what's going on.
Yeah, I mean, yeah. So, I mean, I'll give you another example of this. If you're trying to remit funds, do you realize that a lot of people don't realize this, that in most cases, the money that you give to a Western Union or MoneyGram or even to your bank, and you want to send that to another country, it's going to touch 3 to 5 different financial institutions before it actually lands where it's supposed to go. And if there's any error in those payments, you're going to end up with something that you thought might be available within a couple of hours. You're going to end up in a situation where if there's any errors in those transactions that those financial institutions then have to resolve for, it's going to add days, and at times, weeks. It can actually add weeks to the actual fund being available.
Man, that's painful. That's painful. And it makes no sense to think that when you have somebody that's, like you said, they're traveling across to maybe Singapore to do domestic labor and they've got kids, elderly folks that are depending on them. And you're telling them that they got to have a delay because of paperwork for 2, 3 weeks when there's food and lights to get put on. That is definitely something that needs to be tackled. And so, in talking about that, let's start going into the protocol. So, for the listeners that may be first timers, this is the first introduction. Help them to understand how does blockchain, distributed ledger technology in general tackle these hurdles? Because we talked about Swift, right? Swift
Sure.
is made 45 years ago. So, how do we get into the future?
Yeah, and so picking up from Swift, 45-year-old system. Prior to that, it was a telegram, right? So, yeah,
So
I
we
mean,
went
that
from a
just puts things
telegram
in.
to a 45-year-old system. It's been 45 years since we've done it. This is
Yeah,
embarrassing, actually. All right, go ahead.
it is. I mean, we can laugh about it, but it has real
Yeah.
implications, right? And we just talked about a lot of those things. And this is where I think DLT, really comes into play, because if you look at what happens today, what causes the delays I was talking about, and it's because the institutions, if you look at what the messaging systems look like, you can only have a certain amount of characters in any message. I mean, this is moving money by SMS, if you will, right? I mean, just think about that. You can only have a certain number of characters in this message and to try to get a transaction done. If somebody makes a typo in an account number, that's only found once the message has been sent and the institution receiving the message says, "Oh, wait, the name on this message doesn't match the account number in the
Hmm.
message. So we can't process this. We've got to send a message back to tell them that they got it wrong. Go correct, get it, message us again once you've got it correct." Right. And so you start to enter into all these delays. And this is where DLT comes in and is able to provide the underlying technology that starts to improve on a lot of these situations where we can now make these things atomic, if you will, where messages and settlements can really start to happen at the same time instantaneously because you remove a lot of the friction, a lot of the operational frictions from this because you can pre-validate information for the messages actually sent. All parties involved in the transaction using DLT can see what that transaction is at any stage of the transaction. So it removes a lot of the possibility of those type of errors happening. It removes the need to do fraud investigations and things like that to a large part because the transactions are immutable. They can't be manipulated. So you have a certainty of the state of any transaction. If something is wrong in the transaction, everyone involved can see that. If the transaction has completed, everyone involved in the transaction can see that. So there is no need to have to go back and forth and have days of delay, hours of delay introduced as people validate and verify information. All of that becomes really automated and instantaneous using DLT technology.
I mean, you got me really, really excited. So I understand the culture. I understand what's going on over there in the Southeast Asia. All right. I've got an understanding of some of the problems. Okay. Now I want to make sure that these workers that depend on this money are able to quickly, efficiently, cheaply provide for their families. And this is why Velo Protocol is coming into existence. So now let's walk us through at a high level to understand what Velo is and how it will work in a real world scenario.
Sure. I guess let me try to break this down as simply as I can,
Please.
for folks. Um, there are really three major components to Velo and how it works. And so I'll start with the first one. The first one is our network, a network of trusted partners. So these are businesses, banks, and other types of financial institutions that become trusted partners by completing a series of qualification audits, anti-money laundering, know your customer procedures. So basically a lot of the things that a lot of financial institutions would be familiar with today, we do with any institution that wants to join the Velo network. And the reason that we do it is so that any other trusted partner that becomes involved in the network has the confidence and the certainty that that the other parties they might be transacting with across this network are actually viable and verified companies and institutions. And that becomes really important as well, because you want to be able to have some trust and certainty with the different types of players that you might be transacting with. The second aspect of our component of Velo is, of course, the Velo Token, which are issued on Stellar.
All right. All right.
That adds a lot of the technical functionality and capabilities of the Velo tokens. Then we also have the Velo Protocol, which is a blockchain-based, obviously, financial protocol that enables the issuance of digital credits that are pegged to any fiat currency. So this is, again, getting to how the Velo token works and having the digital credit pegged to any fiat currency. The Velo Protocol also powers the interaction between in the federated credit exchange network. So all the transactions between the trusted partners are powered by the Velo Protocol. So those are really the three major components in Velo. It's the network, the trusted partner network, Velo tokens, and the Velo Protocol. At a use case level, typical use case, to give you some example, the Velo Protocol starts with the issuance of digital credits, which are collateralized by the Velo tokens. And then there's smart contracts that link the Velo token to the digital credits and actual fiat deposits that back up those Velo tokens. So that's one thing I would touch on too, is that the Velo token has to be collateralized by actual fiat deposits, right? And so once you do that, you get Velo tokens that then can be used as digital credits for these transactions. And then so the business partner transact using those digital credits that are all backed by Velo tokens and the fiat deposits that back those tokens up.
Okay. All right. So the MTOs themselves are collecting that capital from the customer, and that's being used as collateral, correct?
Yeah, that's right. So the MTOs, the banks, businesses, if they wanted to leverage Velo, like say they joined the Velo network, they would collateralize. They would put on deposit some amount of a fiat currency, whatever that might be. So let's say it was 100,000 USD. They would be issued the equivalent token. So 100,000 USD pegged to with the Velo token. So say 100,000 Velo USD,
Okay.
would be issued to them. And then that 100,000, that actual fiat deposit would be held as collateral against those tokens, and then the institutions can utilize those tokens to transact and trade with each other.
Okay. So now for the average consumer visiting these stores, small MTOs, will they have any idea that they're using blockchain, or for them will it just be a normal transaction?
Yeah, so no, for them, so it's completely transparent. It's nothing that an end user is going to be aware of directly. But what I would say, they'll be aware that the transactions got faster.
The important part. Yeah.
That things got to where they need it to be. So they will be aware that their life improved, but they're not going to know, and they don't, and in a large, to a large extent, they don't need to know that it's blockchain. And I doubt they care.
Right.
At the end of the day, they want their problem solved, just like any of us. I mean, and it works the same way for SMEs and corporates and the financial institutions that will leverage Velo as well. They'll know because they've obviously integrated their systems with Velo and leveraging the Velo protocol. But at the end of the day, it's transparent. It's just like the internet. It's just what makes things happen, but you don't actually see the internet.
No, I think that's a great point. I've always believed that for those of us that are in the blockchain crypto community, what we really want is to get to a point where the average person has no idea what they're using. Like you said, the same way, when someone sends an email, they're not thinking I'm using the SMTP protocol. You know,
Yeah, exactly, exactly,
all they know is I need to get Johnny these spreadsheets by 8 o'clock, and it's there. That's all they care about. So I think that's
exactly.
great. Stellar has an app that's coming out. They've been talking about Vibrant, and I'm excited about it, and mainly because in many ways, I believe that the average consumer is not going to have any idea, nor do I really care if they know that they're using Stellar to transfer the money. So that's great. I'm glad to see you guys around that same ease of use. While on the subject of Stellar, as this is for the Stellar community, I want to ask you a couple things. So, obviously, you mentioned earlier that you did have a history with Ripple as well as some other blockchain related companies. And so I would assume that there was a lot of discussion as far as which protocol to do settlement on. Can you share why Stellar out of all the options that are out there?
Yes, yes, definitely. It's pretty well known that that Stellar's founder, Jed Matode, also founded Ripple, and he's played key roles in the design and development of both Ripple and Stellar. So there's definitely similarities between the platforms. Both platforms boast the ability to process thousands of transactions per second and can support scalability that real world use cases, especially in payments, require. But in my opinion, I believe Stellar has several advantages. For one, Stellar is open source, right, and it's interoperable. So that already becomes very powerful for organizations like Velo Labs, with what we're wanting to do in the industry. The open source nature of Stellar it provides for a more inclusive community, which I think really leads to better outcomes in areas like discoverability, maintainability, extensibility, adoption, and at the end of the day, innovation and quality.
Wow.
Right. And then those are things that the more proprietary a solution it is, the more of those things I think you sacrifice. As well, I think second advantage is that Stellar enables us to conduct a huge number of transactions at very minimal cost. The fees come out to about $1 for about 100,000 transactions.
Wow.
So I mean, that's a huge benefit, right? That's a lot of savings. So as the Velo ecosystem expands to serve higher scale of businesses, more transactions, more utilization, Stellar really allows us to easily scale to that demand and accommodate, mass adoption of services that are needed. Third advantage to Stellar, honestly, is that it supports the issuance of tokens, where Ripple really doesn't. Outside, it just works in its own native token XRP. But without that functionality in Stellar, we wouldn't be able to issue Velo tokens, to support the Velo protocol. So that's a major one.
Wow.
Another advantage here that I would see is that Stellar enjoys a really strong ecosystem of partners, in Stellar terms, anchors, who provide access to many corridors for cross-border payments. Leveraging this ecosystem can help cut operational costs of holding pre-funded accounts across the world. if I were to compare to some of the things that companies like Ripple are doing, it addresses the issue to an extent, but it also requires that you transact in XRP, right? If you're using Ripple ODL, there's no variety of assets where Stellar allows us to be able to do that, can transact really interoperably between any type of fiat or digital asset for that matter, right? We can peg all these different types of assets to the Velo token, and that's just not possible with the Ripple blockchain right now. And so, that's a huge advantage for us with Stellar. And finally, Stellar really has the same focus that Velo Labs did in starting this, with really wanting to lower the barriers of entry for people around the world, the unbanked and the underbanked populations. And that was very important to Velo Labs, is anyone that they were partnering with for core technology, they wanted to have that that same alignment, that same vision of the world. And so I think that was really very important to us. And honestly, rounding this out, in my view, the ethos and the ecosystem of Stellar are extremely strong. That, coupled with the advantages of the technical advantages of the Stellar platform, and the fact that Stellar's is relatively inexpensive to boot, it just provides a clear lead versus many other platforms in the space.
I mean, man, you really covered a lot of ground there, and I appreciate that. Stellar is exciting to a lot of us for all those reasons, and we got to chat a little bit before we started recording. As an entrepreneur myself, I've seen firsthand the hurdles of the cost to try to start up businesses on your own, and so it's great for the audience to hear that Stellar is great for if you're a small one man show, one woman show business, all the way up to entities like yourself. So you really hit on a lot of great things. So we appreciate that. I know the Stellar family does. In your white paper, I was reading, and it mentioned that the Velo token itself is issued on Stellar for settlement and clearance. But then the Velo itself is a set of smart contracts used to issue credits linked to fiat deposits backed by the Velo tokens on Evernet or EveryNet. Can you break down or explain a little bit how that relationship works for the audience?
The Velo tokens are assets, like you said, that we issue on Stellar, where we've developed this smart contract capability called EveryNet to work seamlessly with the Stellar protocol. So Velo Labs is using a cross-chain protocol called Uob to bridge the Stellar-based Velo tokens and EveryNet. So that's how we're going cross-chain between the smart contract in EveryNet and Stellar protocol. So when a smart contract function is needed, the relevant Stellar-based Velo tokens are locked in a custodian multi-signature address, and then the EveryNet tokens corresponding to those Stellar-based tokens are then minted.
Okay.
And once the relevant smart contracts executed, then the EveryNet tokens are automatically burned and the original Stellar-based tokens are unlocked. A little bit technical there, probably about the extent of my technical capabilities of explaining it. So hopefully I didn't lose anybody in that.
No, that's good. That's good, because I was trying to understand that, and that gives us a good level of it. So earlier you were mentioning that the Velo tokens are guaranteed, and we talked about collateral. There are two innovations that I caught as well in reading through that your team developed, and so there's the digital credit insurance and digital reserve system. Could you briefly explain those concepts for us as well and how they work?
Sure. So first of all, yeah, the tokens are guaranteed. And look, just to explain, like the digital credit issuance and digital reserve system, digital credit issuance system is part of the Velo protocol that issues digital credit based on the total value of the Velo tokens staked as collateral. So for digital credits to be issued, two conditions have to be met. First, the issuer has to be a trusted partner. So again, they have to have gone through our verification process to become part of the Velo network and a trusted partner on the Velo network.
Okay.
Second, the issuer must obtain and stake Velo tokens to the Velo reserve pool. They have to put up a form of capital in order to get the Velo tokens into the reserve pool. right? So that helps to guarantee the tokens. After staking the Velo tokens to the Velo reserve pool, the trusted partner receives digital credits that are tied one to one with the fiat currency of their choice, right? So whatever the fiat is that they've put up, and then and as well in time that could also be that could be digital assets as well. There's no and it could be exotic currency, so not necessarily fiat,
Okay.
but any traditional currency, digital asset pegged one to one, whatever they put up as collateral is then put into the Velo reserve pool to back those digital credits. And so that's how the issuance works. Now, the reserve system really consists of three main elements. The first is a collateral pool where trusted partners deposit their Velo tokens to receive corresponding digital credits. And secondly, a reserve pool where the reserve Velo tokens are stored. And third, a balancing mechanism to maintain a one-to-one price ratio between digital credits and the relevant currency that they represent. So basically, the digital reserve system works to achieve a one-to-one price ratio between the issued digital credits and their corresponding currency by automatically adding or removing tokens to or from a trusted partner's collateral pool as the price of Velo tokens fluctuates on the open market.
Okay. Let me ask you a straightforward question, right, for the audience. What happens if the money transfer fails? Can the money transfer fail? Like, what happens in that scenario?
Yeah, look, I would say it's improbable, but
Okay.
in this world, we've even when things are improbable or are viewed as even impossible, Murphy's law, right? It can always happen.
Right.
So I've learned not to say impossible. The furthest I'll go with anything is improbable. But if that did happen, if a money transfer failed, either the failure occurs at the deposit level, the currency deposit level, or at the digital credit level. If the failure happens at a currency deposit level, then the best way to look at this is as a simple default. In such a case, the Velo token serve as collateral and protect that trusted partner, right? So there's no loss incurred if that happened. If the transfer were to fail at a digital credit level, that really gets to be a more of a technical issue,
Okay.
where that type of failure is likely to stem from either a trusted partner's account balance was too low, and so the transfer failed. So, for instance, if the partner tried to send $100 worth of digital credits, but they only have $5 worth of digital credits in their wallet, then the transaction will fail. It won't pass verification and wouldn't be processed in the first place.
Okay.
So that would be one way that could happen, and that's fairly obvious, right? You don't have enough money to do the transaction, you don't have enough credit to do the transaction, then the transaction can't be allowed. So in that way, it might fail. But the second I could see here, if a trusted partner, say, has $100 worth of digital credits in their wallet, and then they sign two separate transactions worth $90, and both transactions may initially be issued. And again, I think this is very improbable just because of how DLT works and the speed at which these transactions are processed. It's very improbable that could happen. But let's say, for instance, that they did sign two separate transactions worth $90 when they only had $100 of digital credits. Then the system will check each transaction against a trusted partner's account balance. And the first $90 transaction would be validated, and the trusted partner's account balance would be deducted. The second $90 transaction would then fail to be validated because by that point, the trusted partner would only have $10 left in their account, right? So that would be the classic double spend type issue. But the way that the protocol and distributed ledger works, again, something that's highly improbable to occur.
No, that's good. And I appreciate you taking the time to answer that. Because, like I said, we have a lot of people in the community not familiar. Some of those folks are tuning in right now that have no idea what DLT blockchain is. And so these are all very basic questions that I'm sure they want to hear. And I appreciate you going through the exercise with me.
Yeah, and look, they're important. They're important questions because, like I said, while that double spin scenario is improbable to ever occur in Velo, and because of the way that DLT works and the settlement times, and we're talking seconds here,
Right.
right? But that double spin problem is a real world thing that can happen. with more manual based ledger systems and messaging systems like Swift and things like that. This and that double spend is a lot of times how fraud can be committed as well. But like I said, and I won't say impossible because that's just not real in today's world. But very improbable. And I think that's one of the big benefits of technologies like DLT.
And you guys have a system in place, which is important. Another question that came to mind as we were talking: am I correct in looking at Velo as just a stable coin? Is that fair? Or am I wrong on that?
I would say that you're wrong on that, but I'll qualify that, right? Because I think it's very easy. Look today. When people look at blockchain and digital assets, it can be really confusing, right? There's a lot of different things that happen, and so I don't think while it's not accurate, I don't think it's wrong to say for you to be thinking of it as a stable coin because we are talking about it being pegged and guaranteed by traditional currencies or other types of assets. And that's the definition of what most people would generally accept as a stable coin,
Right,
right?
right.
That's how you describe Tether, right? Tether's supposed to have 1 USD to every Tether issued. So absolutely, I could see where the conclusion would be drawn at, oh, it's a stable coin. But let me qualify why it's different than a stable coin. And so I would say it's not simply a stable coin. It moves beyond a stable coin, to be a very unique asset in its own right. The Velo token can actually fluctuate on the open market. So while it's collateralized by deposits of traditional currency to create the digital credit, the token itself can fluctuate on the open market.
Interesting.
One of the Velo token's unique traits is its role as a bridge asset, if you will. So Velo tokens link the values of a number of different traditional assets to those corresponding digital credits we were talking about earlier. So in that way, Velo tokens actually serve as a vehicle to transfer liquidity and value into the Velo network. So as the Velo network starts to accept more types of assets as collateral, right?
Mhm.
So as more, and when I say more types of assets, like I said, that there's a very broad range. I don't think I wouldn't put any limit on the types of assets that could be put up as collateral. Could be fiat currencies, traditional currencies, gold, silver. Basically anything that any asset of value could conceivably be used as collateral to issue those digital credits. The Velo token bridges the gap between all those different types of asset types,
Mhm.
guarantees the value and liquidity of the digital credits on the Velo network, and acts as a Velo ecosystem's universal collateral.
Wow.
So does that
Oh
help a
yeah,
little bit?
yeah, yeah, yeah. I stand corrected, ladies and gentlemen. It's definitely more than a stable coin.
Yeah, yeah. I mean, I think we'll have to see if we can't market a new coin definition.
Right.
But yeah, no, that's one of the things that I think is really compelling around the Velo Labs project is that it really starts to move beyond a single asset class or a single form of value and starts to unite all of these different types of assets into one ecosystem. I think that's powerful.
So yeah, absolutely. So what comes to mind now, if you talk about that, is you mentioned it can fluctuate on the open market. So is there a built-in utility plan for the token within the ecosystem?
Yeah, yeah. Look, the primary utility of the Velo tokens is that they must be purchased or otherwise obtained and then put forward as collateral for the trusted partners to issue digital credits pegged on any of those assets. That way the Velo token becomes very central to the Velo ecosystem.
So to be a participating member in Velo, you have to have a Velo token.
That's right. You have to have a Velo token. Otherwise, there's no reason for you to be a trusted partner.
Mm-hmm. Mm-hmm. Very, very important. Very important.
It really becomes crucial to how these different types of entities interact with each other.
So I know that we've focused on cross-border remittance, and as we're talking about the Velo token, are there other use cases, plans for the Velo token?
Yeah, so there are a lot of things that are going on. Payments lies at the core of that. While the current target market, we're talking about remittances. We're looking at SME services, corporate services, and things like that. There's a number of different applications and use cases that can be put forth in the financial ecosystem, especially in terms of payment and transfers of value. So you've got SME payments, corporate payments, like I said. You can even in time have have trade finance use cases applied to this. So yeah, there's a number of things that we're looking at and we've got going on. So I would say in terms of use cases, sky's the limit.
Okay. I've definitely expanded my view on Velo here, and I'm sure a lot of the audience members have as well. So going back here, I know that having key partners is important for gaining adoption, right? Coming into it, I know that as far as the board members, but I was wondering if any clues or insights that you can share with us of some partners that Velo has secured so far.
Sure, I'll share what I can. I mean, I don't want to break anybody's confidence
It's
or
just me and you talking here, Mike. What are you talking about?
yeah, yeah. Talking with the whole world listening. Uh, yeah, let me share a few things. So, there's and a lot of these things have been in the press, but just to recap some of these things. So, right now we've got companies like LightNet, it's a Singapore headquartered fintech company dedicated to to improving the lives of the unbanked and the underbanked. So they're really a very powerful partner for Velo Labs in providing the remittance platform and as they develop their remittance network and ecosystem, helping to solve that problem of the unbanked and underbanked and giving more accessibility and more reach in cross-border payments. LightNet is really Velo Labs' first trusted partner, very close with Velo Labs.
Oh, and
And it's really
real quick, shout out to Mike Kennedy, by the way. I know he's listening. Shout out to Mike Kennedy.
oh yeah, that's great. I'm glad Mike is tuned in. Hopefully, I'm impressing him with some of these answers.
Hit the like button, Mike, please.
That's LightNet, and that's really the first partner that's putting the Velo protocol into a production use case. But we also have others that are developing. So we've got a partnership with Seven Bank in Japan, and this is one of the partnerships that really excites me. Seven Bank is one of the more innovative banks in Japan, and like I was saying, if you walk into a 7-Eleven in Japan,
Mm-hmm.
right, you have full banking services right there in that convenience store. So just as quickly as you can grab some of your daily necessities, you can be withdrawing cash, you can be depositing cash, you could even be purchasing goods and things like that through bank account in 7-Elevens in Japan. So I think looking at what Seven Bank does is also very visionary with how those things, and especially working with the Velo protocol, those type of use cases can be extended across all of Asia, Southeast Asia, and knock on wood, globally in time.
Wow. Wow.
Yeah, and to share, we've got Band Protocol. So I'm not sure if you're familiar with Band at all. But Band is a cross-chain data oracle platform that aggregates and connects real-world data and APIs to smart contracts. Right. So I'm looking for this to be a very powerful partnership for the Velo protocol. What Band is doing with us, Band is bringing a real-time foreign exchange data oracles to support the Velo protocol. So again, having that partner provide that type of service on the Velo network really provides a very powerful offering. So I think that's going to be great as we move forward. And obviously we've got Stellar in there, and so I think anybody listening to this podcast doesn't need to be introduced to Stellar. We've got a few more, so I'll just run through them. We've got SEBA Bank. So that's a crypto bank out of Sweden that's expanding internationally. So we're closely partnered with SEBA. We've got UniPresident, which is another very large Asian conglomerate. So again, multi-billion-dollar conglomerate that also happens to own 7-Eleven franchise in Taiwan. So if you're ever in Taiwan, you step into a 7-Eleven, you're doing business with UniPresident. We have Uob Venture Management. So Uob Venture Management is the venture arm of one of the largest Southeast Asian banks, United Overseas Bank, UOB. So that's a very important relationship, a very important partner for us as well. We're partnered with Kyber Network, partnered with HashKey, and you mentioned Mike Kennedy. Mike Kennedy a few minutes ago. So we're partnered. We're tied up very closely with Interstellar, very close relationship with them. As a matter of fact, I know our CEO and Mike Kennedy speak on a very regular basis.
Awesome.
Right? And then we also have Signum Capital. So that's just a few, and there are more in the works. And like I said, some of them I can't talk about right now, but I would say, keep an eye out, for press releases and things, because there are some really exciting things that will be coming out here very quickly.
Please, and definitely make sure to hit me up. I'm excited. I'm going to be following you guys really, really, really close. So, I mean, we covered a lot today. I've kept you here for a while. Just to round some things off, I know that there was one question I wanted to chat about as well. We touched on it earlier. Is I know regulation. I know you guys have a lot of major partners already jumping on board. So I'm curious, how has that experience been in dealing with regulations? I know here in the States, we were fortunate. We just got an announcement that 48 state regulators agreed to a single set of supervisory rules to reduce compliance
Mhm.
costs. How has that experience been for you guys? Because there's a lot of things that seem to be in the pipeline, but without regulations that's friendly, it's hard to put them into action.
I'll answer from from my experience in industry in general, right? And like I said, this isn't my first trip around the block. Regulators are important. I, for one, working in this industry, would say regulators are absolutely needed in this industry. A lot of folks will want to believe that, cryptocurrency should be a way of transacting without regulatory oversight or involvement. I think that's a complete fallacy.
I agree. I agree.
Regulators are extremely important. So when I first got into this with Ripple directly, and I've gotten asked that question, how do you get a bank to sign up for blockchain? You're not getting a bank to sign up for blockchain. You're getting a bank to sign up for something that is going to help solve problems that they have. It doesn't matter if it's blockchain, right?
Good
It
point.
matters that it solves a problem. Now, luckily for us, blockchain solves a lot of problems. And it's the same thing with regulators. So, in my experience with regulators, and this is held true, now with my work with Velo Labs, when you're able to show a bank or a regulator, when you're able to show a regulator the problems that are going to be solved by this technology, right? That's what they want to see. So, and it makes the conversation with regulators so much smoother. The fact that you're willing to have those conversations, the fact that you understand what regulatory compliance needs are, and that you're able to readily address those needs. You're able to show how you're going to make areas of improvement for the industry that regulator has oversight for, is extremely important. That's what we do at Velo Labs, right? We're very closely tied to regulatory requirements. We ensure that as we build out technology, that regulatory compliance, regulatory needs, not just for one jurisdiction, but for multiple jurisdictions, are met and allowed for. And we also build extensibility so that as new regulations come out, we are able to support those things.
Man, that's great.
It is, and I think you want to have the regulator on your side, right? We cannot move forward as an industry if we aren't doing these things. So while Velo Lab does it and embraces those relationships with regulators, the industry needs to do that. The more resistance and the more evasion towards regulators, it just takes longer to reach that point of mass adoption and mass utilization that I think everyone in the blockchain industry wants to see.
And what I see as an advantage for a lot of the developers that are building today on the Stellar blockchain on various projects is when you have an organization like yourselves who are making that effort, opening those doors, it makes it so much easier for the next developer that has a project on Stellar to walk through those doors because now there's familiarity. So I know on behalf of a lot of the developers and entrepreneurs on the Stellar community, I know that they appreciate you guys shining a good light on Stellar. And not just Stellar, but I think the entire blockchain community because it's showing what we can do. It shows we're growing up a little bit. So it's definitely appreciated.
Definitely. I mean, we want to be seen as a leader in this industry. And if you want to be seen as a leader, you have to lead by example.
Absolutely. So as we get close to wrapping everything up, let's say, what are you able to share as far as the rollout phase for the Velo ecosystem? How soon are we for a 2020 Q4 launch? Is anything possible? What do you think? What can you share?
Yeah, no, I love the question. That's a great question. And look, we are very close and we're on track. That is possible. I can't confirm that. I don't want to take I don't want to take the wind out of anybody's sails on this or kill the
Sure.
excitement. But 2020 Q4 launch, I would say we are very close. We are on track. definitely keep an eye out. Keep an eye out on our website, Twitter, Medium, and Medium accounts. There'll be a lot of announcements coming up.
And by the way, you mentioned the Medium. Whoever's behind the Medium account, shout out to them. I've been following and reading and enjoying those posts and sharing them. So like I said, you got a real good crew out there. We appreciate you guys. You got a really good team, really good team.
Thanks. I'll definitely make sure to share that with them. I'm sure they're listening, but if they're not, I'll make sure that they hear that.
I'll be honest with you. I could talk to you for hours, Mike, but I know we got to wrap things up. I want to thank you so much for joining me on behalf of Public Node and the Stellar family community. It's been a pleasure speaking with you, and I know that there's probably folks that, despite the fact that we've been on here for over an hour, are going to say that there's probably maybe a question or two that they wanted to get in. So I'm curious. I mean, would you be open to doing maybe an AMA in a couple of weeks, so that way we can open up to the seller community?
Yeah, absolutely. Look, I've enjoyed the conversation, and likewise, I could sit here all day and talk with you, and I'd be quite happy to do it. I don't know, if my boss or anybody else is going to be happy that I'm spending the whole day talking, but I'm certainly enjoying this, so I'd be more than happy, to come back for an AMA, definitely.
Man, that's awesome. Well, you heard it. We got them recorded, guys. We are going to try to see if we can plan something out in the very near future. Once again, Mike Cowans. This is Sam Connor. Hey, I enjoyed it. Thank you very much.
Thank you, Sam. Thank you. I appreciate it, and look forward to speaking again really soon.